sector and get a sense of what industry experts then are penciling in. In fact, Jimit Devani, partner at Deloitte India, anticipates that the government is going to be introducing amendments to simplify the tax regime, possibly roll out a group tax framework as well. On the other hand, you also have Vinay Pabba, who's from Vibrant Energy, talks about the need to rationalize multiple TDS and TCS rates, also suggests that the government could be considering concessions for the green hydrogen sector. Let's go across and listen into what they then had to say.
Extension of the concessional tax regime of 15%, which expired on 31st March 2024. Many of the investors had invested huge amount of money on the expectation that they will be able to generate power or start manufacturing by 31st March 2024 and avail this 15% concessional rate. However, due to land evacuation issues or right-of-way issues or land acquisition issues, they could not generate power or start manufacturing before this date. The second expectation is around carbon credits. Today, the carbon credit is taxed at 10%, but that's only on credits which are approved under UNFCCC. The voluntary emission reduction certificates or the REC certificates are not eligible for 10% rate. The government may want to consider this extending this benefit of 10% to these two certificates also. The third is the simplification of the tax regime, which needs to be extended. This time around, while there may not be a full simplification of the direct tax code, part amendments could come in. One of the expectation which is there as far as this sector is concerned is the introduction of group taxation regime. This will sort out a lot of issues as far as this sector is concerned. Let's hope this sees the light of the day.
So in terms of tax concessions that the budget could think of is to continue the momentum and provide extension to the concessional tax under section 115BAB of the Income Tax Act under 15% for another 5 years. On tax simplification, I think the government has made a very good start on simplification process last year. To further enhance the ease of doing business, I suggest that we rationalize the multiple TDS and TCS rates by converging them into a simple 2 or 3 tier structure, which will avoid classification disputes and prevent blockage of working capital in the industry. I think the budget and the finance minister can also look at some concessions specifically for the green hydrogen sector, which is an upcoming sector. And currently, indirect tax has become a major cost component for green hydrogen in 2 ways. Firstly, green hydrogen is very energy intensive, and most of the power that they consume is from clean power, basically from solar modules and solar cells. And customs duty at a very high rate is being paid on import of solar modules and solar cells. In terms of customs duty, I think the CBIC should either provide upfront exemption from customs duty of 40% on import of solar modules with specified end-use conditions of using such solar power plant for supplying electricity only exclusively to a green hydrogen project. Alternatively, the finance minister could think of extending the benefit of project imports with concessional basic customs duty of 7.5% if the solar plant supplies power to a green hydrogen project.
If you like this video, then like, share and subscribe to ET Now.